All right, guys, welcome back. Another episode of Chart Talk. Getting a lot going on in the market these past couple weeks. Jumping right into things again. Qs, index wise, definitely look the best for short-term breakout. We have this tight little wedge forming here. We see the Qs trying to poke out of it. I'm just going to hide some of these indicators. Again, key out really right now in the Qs is a 600, but again, we can see. Let me zoom out. You can see going back since pretty much May, this trend line has been intact. And now this is the time where we got this, tight wedge starting to form. And do we get the breakout higher? Ideally, in the short term, one could expect at least a retest of the prior all-time highs, which is more or less kind of a chip shot, really not, 1 or 2 days of price action. But we have to expect this 640 to act as resistance at this retest. So this is going to be some massive breakout where we run to 680. But in the short term, we break out of this wedge, we retest 640, and then we start to kind of flag out, which what we saw, with the S&P, recently as well. So, S&P still within this broader range here, just not as a defined setup as like the Qs where it's a very tight wedge. Again, for the S&P, 650 is really the key out until this breaks. There's really no, don't expect, bear market anytime soon. But if and when the time ever comes, 650 will be the real out. Again, could 680, this recent pivot low break, or could 670. These are not as significant. This 650 is really the big line in the sand. But as we stay in this breakout channel, we want to be buying up off of support. We want to be selling into resistance. And right now we're just kind of in the middle of this range. So, new highs often begets newer highs, but it's tough here to really find like an actionable entry other than just blindly buying the highs, which there really isn't anything wrong with that. If you did that this entire year after we took out those highs back in July, buying new highs clearly paid off very well. So like the S&P, Dow Jones, pretty much in a similar camp here, very clear breakout channel. And now we're getting very close, the Dow names, towards the upper end of the resistance area in this channel, which typically acts as support. And we'll see that with a couple of sectors in a moment. Again, VIX super low, hovering near lows, even with all the volatility in the market going on. VIX is still pretty low, so we got to enjoy that. Again, strong sectors, semis, new all-time highs, which sectors looking strong. Industrials, again, kind of one of the outliers in that example with the Dow 30 names. A lot of times when you're in this breakout channel, this area acts as resistance, which for the industrial space, it has done that pretty much since August. But recently, it started to break out and turn that resistance area into support, which is what we start to see a little bit with the semis over in this area, where if we zoom out, we can see this overall resistance area that the semis were in, and it's spent a couple of days above this area. But when you're in these, these breakout channels, it's hard to really break out above the resistance area of these channels. So we're seeing that in the short term with industrials. It'll be interesting to see if they can really sustain this move or if it's going to kind of fade back in. But it's hard to chase this move. It's hard to be looking for the entry here. You have to really be, kind of trading this range and buying off support, selling into resistance. So we saw that as well with materials and consumer discretionaries, where it was more of a broader breakout, more of a horizontal break of resistance, which is what we tend to focus on more so here at Big Picture, where we look to buy the horizontal breaks of resistance, not the diagonal ones, where these are a little bit easier to spot. More traders are going to keep an eye on this break, where when you're trying to find the breakouts on, a diagonal breakout channel, it's harder to be, less eyes going to be on that breakout than this breakout through all-time high. So materials look great. Consumer discretionaries is probably one of my favorite sectors for the year ahead. They spent basically the second half of last year consolidating under all-time highs, pretty much had a flat year for the most part. The sector returned like 6%. So didn't do much last year. And now it's kicking off the new year with this breakout through all-time highs. So definitely keeping a very close eye on the consumer discretionary sector. Now, consumer staples have been, somewhat left for dead the last couple of months in this broader flag. We can see these arrows here just showing the lower highs repeatedly. But, this week, consumer staples are starting to break out. And for now, it's that run up back to these all-time highs. So, for right now, if you're already in staples, is great. But again, to be trying to chase up here when the move realistically is going to stall at this resistance area, it's tough to find those entries here. Where on the flip side, consumer staples were super tight here. So almost, if we're looking at, where consumer staples are now, it's like almost like this weekly candle where it has to run up and retest and set up for that eventual breakout. So could we see a breakout in consumer staples this year? Absolutely. But it needs to get back up here first, retest it, and then start to digest and flag out. And then you get that breakout, later down the road. So again, the big news pretty much going into the new year was, what's been going on in Venezuela. But again, we had that initial pop in the energy sector on that news, but it's going to be more stock specific than the entire sector breaking out as a result. Now, energy has been flagging under, this area going back many years. And if we zoom out, going back pre-financial crisis, this has been a major breakout level going back, nearly 20 years. So, this is going to be a really tough buy when you're buying it through resistance. Really, we put this, anything energy wise, you got to wait for those pull-ins. It's very hard to be perfect buying that breakout. Even again, on this Venezuela news, if you bought the day the day the news was pretty much announced, the market opened, you're down on the trade overall. If you just bought the entire sector, not, name specific. Again, we're talking about these breakout channels and how resistance is a little bit trickier of a breakout. We saw financials super strong going into last week at this resistance area, and it's kind of pulled back since. So this is why we try to focus more on the horizontal resistance breaks than these diagonal ones. Some other sectors setting up, again, these biotechs, we're talking about retests and setting back up. We can zoom out a couple of years and we can see, after nearly 5 years, biotechs have finally gotten back to those 2021 highs. And now it's that consolidation for that next breakout down the road. And just like consumer staples we're talking about, it's that initial run back to highs, that consolidation, that flag, and then that eventual breakout. And that's, what we're starting to see in biotechs. We're starting to see the kind of the same thing here with healthcare. We got the all-time highs from 2024, breaks through, but again, it's still flagging out in this range. It wasn't breaking through all-time highs and just off to the races. So, these broader sectors still need to develop and just take some time. Telecom, super strong, super tight flag at highs. Again, this is a weekly chart, very tight flag through highs. I don't need this big of an arrow. So definitely keep an eye on some of these telecom names, very tight risk entry through these all-time highs. Definitely want to keep in the radar. And the last sector that we really want to focus on, again, has been tech. Last couple of weeks here, last month, just getting super tight in this range, pretty much 4 inside weeks in a row. So keep an eye on this 770 area and definitely keep a close eye on a lot of the tech names where, the sector's setting up very nicely. Only real weakness out there, again, is utilities, which again, for most swing traders, we don't care because we're not really trading utility names, very low beta, slower moving names, but just pulling into macro support, just avoid for now. On my end, main trade really for the start of this week has been this Tesla. We can see we got a lot going on here. I'll delete some of this to simplify it. So we had a nice entry in it back in September through 360. And we saw, after it puts in new all-time highs, pulls back in about $80, pulls back into this trend line that's been holding this entire way up. Again, we don't want to see this break. If we want to see a break of 500 at some point this year, we don't really want to see this trend breaking anytime soon. So after seeing this name pull in, about $80 a share, pull into macro support. Again, we're not catching it on the way down. We're not trying to buy any of these red days, but we see it come down into support. We see it hold, and then we want to buy back up through those highs. And we can see, there's been a few times where this Tesla's kind of broken out through this 440 area. So we added to this swing. We still have the core from 360, still keeping this trade or this position, the stop versus 380 area. We added through 440, stop versus 425 for now. And this is going to be more just a swing trade, or if this runs back to 500, we would expect sellers to try to, whack that area down. So best case, we get a short-term run back to 500. We'll take that, take some off into that and try to, continue to trade this range until there's a bigger breakout through 500 or a break of support. And then it's time to kind of, look for the exits. Talking about names that have been respecting support or their support kind of trend lines, this Gilead, for more than a year now has been respecting this trend line the whole way up. And if we zoom out, I'll switch to a weekly. This is Gilead hasn't seen these price levels going back almost a decade, if not longer. So a decade later, Gilead is finally starting to wake back up. It has already, pushed through its all-time highs, which is a good sign. And now we're just waiting for the breakout through the current all-time highs through this 130. And once it can really get out of this area, that's when you start to see, that easy kind of drift higher. So definitely keeping a close eye on Gilead, getting very tight up here, 130 versus 120, a couple, 5% risk here through that breakout level for a macro, decade-long setup that's been setting up. So keeping a close eye on that. Last week, we had an alert in Hyatt. Just wasn't ready. If we zoom out a little bit here, going back to the beginning of last year, we can see this 168 area was, that all-time high breakout. It got back up there recently, very tight flag. So we can zoom in now. Very tight flag here through this 168 area. We got in through the all-time high break. But again, we're expecting a break through all-time highs. This, we should not be seeing our price level or our entry price the next day. So this was one where this was the proper out, 160. But if we're buying 168 and it goes, $4 in our favor and quickly comes back, no sense in giving this thing $8 worth of risk when it goes, a couple bucks in our favor. So this was one where it was just taking this trade off break even, no sense of rotting with it. It ended up selling off, say, about 3% and closed, down about 2%. But again, this is a trade I take 100 times. But if it's coming back to the breakout level, day 2, don't want it. You want to see bullish engulfing the next day. You want to see this in closing 172, 173, so 174. You don't want to see it back under the breakout level. We're just too early to the breakout, which is no big deal. We lost nothing in it. It can even now shake out this level. Maybe it needs to come back to 150 again. Maybe it needs to even shake out that area further. Who knows? But for now, break even trade. That was the worst trade from last week. No big deal. We've got Tesla. It's working well. We got Hilton that was break even. Who cares? And now we can move on to a couple of alerts that were firing off today. So we had some alerts, again, reminders of telecom breaking out. We had NXST breaking out to 201, Baidu through this 150, and this Tesla trade. So we'll look at this Baidu. Again, a lot of these Chinese names have been waking up. Yeah, Bob up, 10% today, breaking this little downtrend. Looks great. So a lot of the Chinese names waking up. Baidu as well, is flagging out on this 150, pulls back in, gets right back up to that 150 area. So keeping a close eye on this name to kind of push higher, expect like a move at least to like 160 or higher in the short term, just given this recent range of this flag. This NXST still setting up for this 212 breakout. We can see going back from August, this resistance area that's been setting up, and we can just see the buyer stepping up from 200 to 02, now 205. So you got about $7 risk in the name through this 212 breakout. Earnings aren't for months down the road, and not much in the way of prior resistance other than really this like 220 area. So one to keep on the radar. Another alert from later in the day today was this Oracle. Again, we tried this Oracle last week, but it was not ready. We bought it through 200 and it just immediately failed. We bought it through 200, pushed up to 202, looked phenomenal right off the open, quickly, kind of flipped to bearish reversal. And we lost like $2 per share in this as it took out the prior low a day. Wasn't ready, pulls back in, sets back up, and a few members got it today back through that 200 level. So Oracle looking good. Again, this name was, when the AI craze was in full steam ahead, this thing had a massive gap on that news, faded it entirely, and then very tight little base forming down here, where if there's going to be any, eventual rally back to these highs, picking it up down here in this base, just very tight risk to put yourself in a position for at least a move even to like 240. So definitely some tech names, some Chinese names waking up. Again, silver and gold, new highs for both today. Silver is definitely like the new fan favorite in the commodity space. Not really things that we trade, but want to keep an eye on just what they've been doing. Amazon, I know Tim was getting into this one last week through that 234, 236 area. It looks great as it continues to try to climb back towards this retest area. Again, amongst the FANG names, Amazon definitely chart-wise, definitely positioned for a nice run this year. Just needs to retest this 260 and then form this big 40-point flag before it has that run up to 300 at some point later this year. Moving on, again, we talked about telecom before. Telecom sector basically flagging out all-time highs. This ASTS, pretty wild name overall. Still a little bit wide here. Again, it did retest the 100 area on Friday, and it's still battling with it today, but it's still very wide, not the amount of risk that I would be, very excited to buy. If you're buying 100 versus low a day, 93, you're risking 7% day one. Now, again, very volatile name. Its name can move $20, $30 with ease, but still would rather see this continue to tighten up, let 100 select as resistance. If this can be a name where, the real out is versus 95, a little bit more acceptable on my end. This is not a name where I want to buy 100 and day one, you get one of these days and it's down 10% and nothing ever traded in your favor. So when the same sells off, it definitely can. So keeping a close eye on it, but this is one where, needs a tighter entry than day one, 7% risk. This FIG recent IPO, again, these recent IPOs tend to get demolished. They just get a little overpriced. This name has really not caught any bit of a bid, but it's had some bounces in it. Just in the weekend scan, just saw nearly a week of inside days here. About 4 or 5 days inside day. Again, not the best close. Again, if it breaks down lower, don't care. But if this can go inside day and up through 38, there's no reason why you can't get a quick bounce to 40, maybe even a 44, 5-10% trade, short-term swing through 38. So keeping a close eye on it, not going to lose sleep over if it breaks down lower. Again, it's really just been doing that since it's came out, but we've seen these bases before, and sometimes they do get a nice little 3-4 day run up. So keeping it on the radar, but again, not losing much to go over it. Again, this Netflix, just want to continue to show why we avoid stock splits. We talked about this back in November. When a stock is splitting, run for the hills. Netflix has gone on a crazy run the last couple of years, up nearly 1,000%. And, they're making the stock appear cheaper. And since then, it's just been down every single day. It's down nearly $30 since the split. This is why we run for the hills when stocks split. So just another reminder there. SMCI, again, kind of off the radar for most traders, but like that FIG, just a tight little base here. Again, technically, this could be a bear flag down through 28, but only looking at it for potential push back up through this 32, if and whenever that time happens. Again, we've seen these tighter bases in the past, and when this SMCI wants to run, it has definitely the legs to get these nice 20-30 point moves with some relative ease once you get the correct kind of bullish engulfing day here. You can see this week of like inside days at support, breaks up, and you knew that was the day that you were right. You knew where your stop would be placed, and you ride it as long as you can. Kind of same thing here. Base forming, clearly defined entry. You really know where your exit's at, and you get that big run up. So seeing another base forming here, only caring about if it breaks above 32 on some volume, like we've seen the same do in the past. So keep it on that one. Another one is this AS. We tried this name back in the summertime through this 40, broke down, has since climbed all the way back to this 40, even last week, holding 40 to basically the penny. Traded it exactly at $40 a share, couldn't break above it. So there's still a seller in this area, which is fine. We don't care. We just want to buy it when it wants to break 40. So for now, it's about a $4 range. We'd like to see a higher pivot low form here. We don't really want to see this come back in and test 36. We'd like to see 37, hold, form a nice pivot high, and then again, continue to attack that 40 area. So over, last week, Trump announced or did, made an announcement that, these credit companies should cap their interest rate to 10% for at least a year. Again, they don't have to do it. They're not required to do it. What was interesting for myself personally over the weekend, I have a few Citi credit cards, and I had gotten emails that if I click basically a button to activate an offer, I would get the next 9 months or so at 9.9% interest rate. So I don't see that as a coincidence. I see that some of these credit card companies are just going to try to lean on this announcement and get some goodwill from their customers. So if you have any credit card debt, hopefully you get some of those offers as well. But it's going to be definitely an avoid in the short term for any of these credit card companies. So some of the major players, we'll go over them really briefly. Amex, Dow 30 name. Again, don't expect this thing to drop 10% in a day on this. This is one of the biggest companies in America, but 4% gap down is not a day to take lightly. Again, if this trend line breaks, that's when this trade is going to be kind of confirmed that it's over. That would, if this breaks, this would be kind of a confirmed topping pattern, and then the breakdown stage that follows. And again, Meta is in nowhere in the credit card space, but you can see, these examples are 2 breakdown stages. And if we get rid of these lines for a moment, and you just look at when Meta was at highs, Meta looked amazing. This was the strongest chart at the time, or, relatively speaking, names up a bunch, looks phenomenal. No one thinks breakdown stage is coming. But once that trend starts to break, that's what happened. So we saw the same thing here. Again, Meta bounces, 300 points up 50% off lows, flagging out, looks amazing. But once it takes out support and gaps down below it, this is now resistance, and then it's lower highs and lower lows, and those breakdown stages form. So it does take time for it to become obvious. And with strong names, oftentimes people will put more weight that the area is going to hold and that it's going to turn around. Where this is like the first warning shot the credit card sector really has gotten recently, that this could be that shift in trend where, it's been phenomenal the whole way up. Now they're at highs. Most of these credit card companies are highs. Now that's a big warning shot that's going to, pretty significantly affect most of their earnings because they're making most of it from those interest rates. That's going to put pressure on these stocks. And if this support area breaks, then you have, this new trend. You have this new, breakdown stage forming. However, it does form. Again, I'm just showing like a visual example of, then it starts to ping pong back and forth here. And this is the easier times to try to look for those exits. So for now, as long as this support holds up, it's probably fine. If you do get a bounce back up into this like 380 area, probably acts as resistance for some time. Could be, the time to look for the exits in these credit card companies in the short term. Again, same thing with Visa. We saw the gap down. Again, for Visa and MasterCard, we see just more, American Express was more in this, broad breakout channel like we saw with like financials, industrials, materials, this, diagonal breakout channel where Visa and MasterCard, you see more defined horizontal resistance, which again, from a trading standpoint, I'd much rather be looking to buy that 360. But with this news coming into play, this could be the sign of this is, going to be a broader topping pattern. And if support continues to break, then it's, this is the major run up. This is the major topping pattern. And then you have, like that slower breakdown like this. But again, you need to see the break of support first. That's going to be the key theme with, if these credit card companies are smoked, it's going to be the break of support. That's going to be the key sign. Just like energy, if a week or two ago, everyone thought it's going to go to 1 million, and the opposite was what happened. So, a lot of these stocks have been so strong. The last thing in most people's minds are they're going to become weaker now. But Visa and MasterCard, when you zoom out, this could be what, could be the start of a major topping pattern. And even if we think back, again, I'm just bouncing around from, other examples in other sectors. Boeing, many years ago, we're going pre-COVID, Boeing at the time, major run up, super strong stock, leading Dow 30 name, looked amazing. And then once it broke, I'll switch this to a weekly so it's a little bit easier for you to see. Again, up until 2019, Boeing's up 800%. Phenomenal stock, strongest stock in the Dow 30. But once they break major support, this is when you got to get out of Dodge. And that's like what I'm trying to articulate with this Visa and MasterCard example, that if those support areas break, that is going to be the confirmation that the move is over for the credit card companies for the next 6 months to a year. So if in Visa, 320 breaks, get out of town. For MasterCard, 520 breaks, get out of town. For American Express, it's more just a break of this trend line where it's not as specific of a price point, but you could say, 335 for now, or 350 depending on your risk tolerance. And then last but not least, in this credit card space, again, the COF, Capital One. And again, just like American Express, they're in this broader breakout channel. And we can see, for 2 years now, this breakout's been going on, and resistance continues to act as resistance. You get the news that comes out, gaps down, but the chart is not broken yet. This break here and a confirmed lower high would show that switch out of this breakout channel to, stage 4 breakdown. So other major news, again, Trump's guy's been working nonstop. He had some news about buying some mortgage-backed securities, also limiting, the BlackRocks of the world of buying every single, single-family home in America, which I think is great for the home buyer. And as a result of that, home building stocks have rocketed 10% higher. Tough again to try to chase these names now. Again, as Trump continues to do these things, it's going to push credit card stocks down. It's going to push homebuilders up. Whatever else he has in store, it's going to have effects in the market. But it is hard to blindly chase them when the news comes out or you're reading about it days later. If you think about energy, once we knew dictator was captured, oil energy names were up huge pre-market going into that day, that Monday, and energy stocks are selling off since then. The credit companies, they're getting hammered, they're gapping down. Home builders up 10% on that news. But you don't want to be in the game of like waiting for what he's going to say next to dictate what you're going to do, because you have to be absolutely perfect to, okay, he talks about home builders. Okay, now I have to go buy it immediately. And I don't know where I'm going to sell it. It's hard to trade off macro news. If you're already in them and they trade in your favor, amazing. It gives you really defined outs. So if you're already in the home building sector, this is the line in the sand. If it takes out this area, get out. And for now, that's where the risk is. For these credit card companies, if you're in them, it's now trying to see, okay, I've been in this name for 6 months. I haven't really watched it. Now is probably the time where I should figure out where I should get out if and when I'm wrong. So again, there's definitely a lot of names setting up out there. Again, definitely a big focus on the tech names recently. Definitely keeping a close eye on the Qs, keeping an eye on the telecom names, keeping an eye on a lot of the Chinese names. Again, Baba up 10% today, up almost 20% of the week. So definitely a lot of names in play. VIX is still pretty low, so you can still find very tight risk entries. So any top ideas you guys have, if you have any questions, just drop them in the comments below. I'll be glad to help.